What do you make of this environment? I mean, it kind of defies conventional wisdom. When investors are excited about IPOs, people usually like to have IPOs, but maybe not so.
It's interesting. I think what we're seeing is that a couple of things on both the consumer side and the business side. On the consumer side, both the pandemic has created a lot of tailwinds to be able to adopt consumer behavior to this new normal that we're experiencing right now. And we've seen that, I think, with DoorDash in particular. And then on the business side, we've seen the acceleration of billions of dollars being put into infrastructure that was necessary for employees to be able to allow their employees to be able to work remotely. And so I think, these are a couple of drivers. When you think about what we've seen historically, I think going back to, 2016, kind of the private market valuations were really close to what we saw when companies went public. But starting at about 2017, 2018, we saw that the total valuation of these unicorns, once they went public, was about 50% higher than their last private market pricing. And in October, I mean, that's accelerated to above 100%, kind of speaking to some of the pops that we've seen. DoorDash in excess of 80%, Airbnb in excess of 115%, and C3AI 150%. So, I think there's obviously the art of trying to price an IPO, which the bankers do based on what they're seeing from institutional buyers. But what's really interesting is that
this is something that we haven't seen before. Yeah,
that's
the
right.
Retail investor
buyers
is just doing something totally different. I want to get Iris in here. Give us your perspective on whether anything like this has happened before, and had these companies gone a different route, whether it's SPAC, whether it's direct listing, would they be getting a different kind of benefit from what we're seeing from investors here?
I think it's an interesting question. I think it's also something to consider, especially given that Unity did take more of a hybrid approach where they tried to have more control over the process, and yet you still saw quite a big pop in their stock price the first day. I think it was up by about 50% when they were actually started trading. And so I think it's really hard using the traditional IPO process to try to perfect the pricing. That having been said, I think that even when you have direct listings, there's going to be fluctuation in the price based on how much float there really is.
Lo, Barron's over the weekend, I guess, not surprisingly, started to draw lines between this environment and the late 90s. I wonder if you see any overall degradation in the quality of the business models that you are seeing coming to market.
The business models, I think, are a lot more solid in terms of the fundamentals. And, what we're having right now is just a much more rapid adoption of a lot of these technologies, because the ability to access them by consumers and enterprises is much more readily available, given that everyone has some type of device that has internet connectivity, whether it's mobile, laptop. And so, I think the fundamentals are a lot better. But the thing that is starting to become apparent is that, this insatiable demand, especially from the retail investors. I think this Robin Hood generation of millennials and Gen Z, they're really focused on these most iconic brands that they're familiar with. And, I think that's part of what's driving these prices up. That coupled with, we're still in such a low interest rate environment that folks are, especially on the institutional side, willing to take on just a little bit more risk to try and drive those returns.
Shepard Smith here. Thanks for watching CNBC on YouTube.